Hello, dividend growth stock investors. It is Colby, the DGI Crab, and today I have the great honor of having Jeremy from Dividend Stockpile joining today for a discussion on dividends, investing, and maybe a little extra fun things here and there along the way. So, Jeremy, this is the first video of its kind here on my channel, and you had me on yours about a month and a half or so ago, and I thought I would return the favor. I really enjoyed our discussion that we had before, and that one was a little bit more about me. So I thought maybe this time we'd have one that's a little bit more about yourself and your background and your investing style and all of that good stuff. So thank you so much for coming on here today.
Absolutely. Thanks for having me, Colby. Appreciate it. Looking forward to our discussion. And yeah, I love talking to other dividend investors. So this is going to be great.
I'm really looking forward to it a lot. So just to kind of get started here, obviously your channel here on YouTube is Dividend Stockpile. Can you just give me a little bit of just general background about yourself, how you began your investing journey?
Yeah, for sure. So I've been investing for about 25 years total now. So if you date that back, it's 1999. So with that, I've been through all the craziness of the market over those last 25 years. So you have the dot-com bust, you have the great financial crisis, you have the what they call the Fed put in late 2018. The market went down like 20%. Went through COVID. Anything you can think of the last 25 years, I've been a part of. But throughout that whole time, I just continued to add to my investments, dollar cost average, keep invested. And, over that time, it's done really well for me. And it put me to where I am right now. My focus primarily is income investing right now. So dividends, dividend growth, income ETFs, as well as some option selling to produce additional income. So those are my main focuses, and that's what I go over on my channel as well. And that's how we kind of touch base. We had a very similar mindset when it comes to the dividend investing. So happy to have met you and connected with you, and see how this goes.
Awesome. Well, I definitely think that based on anybody that's watched both your channel and mine, I think there's certainly a lot of similarities in the types of investments that we tend to gravitate towards. Big difference though between you and I is I'm not an experienced options trader. I've been doing some reading and some research on it. It's just not my area of expertise, and I know that your strategy, as you've mentioned, does include options. So can you provide just some insight on how exactly you are using options for your personal style of trading?
Yeah, absolutely. And it's not unheard of that people are not aware of options or scared of options, because you hear all these stories out there where someone blew up their account because they did a what they call a YOLO trade on a certain high flying stock and then got completely burnt. So there's multiple different ways to use options in your portfolio. Those that you hear that are making 1,000% return, like lottery ticket type of winnings, those are people who are
Mhm.
buying options. They're buying the right to buy a stock or an ETF at a certain price in the future. And the way options works is it basically gives you leverage. So instead of having to buy 100 shares of Microsoft, you could buy a call option where you have the right to buy it in the future. Well, with that, the value goes up a lot quicker because, again, you're only putting a little bit of money out for the chance of a huge payoff later on. That's where you can get in trouble. If you don't know what you're doing on the buy side of options, you can absolutely lose your entire investment. There's been plenty of people who put their money in thinking it's a sure thing and it went against them. And now their portfolio is at zero, because that's how options work. It's either you win or you lose. And when you lose, it's everything when you're buying options. Your investment
Mhm.
will go to zero. So that being said, I don't do those types of options. I'm much more conservative. Much rather take a slower approach. So I do what they call selling options, which is the other side of the trade. The easiest way to think about it is pretend you're an insurance agent and you're writing policies to other people. You're writing someone else the option to sell you their shares or to purchase your shares from you at a certain point in time for a certain price. And for that, they pay you a premium, just like for your car insurance or your home insurance. As the buyer, I have to pay the seller upfront a small premium or commission, if you will. That is mine
Mm-hmm.
as a seller to do whatever I want with. That's my money, no matter what happens with the contract. As an insurance agent or insurance company, you only have to pay out if something happens, meaning you only have to sell your shares or you only have to buy their shares from them if some event happens. But what that usually is a price change. So let's go back to Microsoft. If you sold an option saying, I am willing to buy your Microsoft shares from you at, let's just say $450. I actually don't know what it is today. And I'm willing to buy those for you at $450 between now and the end of October. That's the options contract that I've agreed to. Because I agreed to it, they're going to pay me cash up front for taking on that policy. And if the price of Microsoft stays above 450, there's nothing that I have to do. No event happened. And so I keep the premium and I keep my cash and I don't have to buy those shares. If Microsoft does go under 450 for that particular month, then the buyer of the contract has the right to sell me their shares at $450, no matter what the price of Microsoft is today. So if Microsoft tanked down to 400, because I wrote the contract, I said that I would buy it at them for 450. And so I am obligated to buy it at 450. So that's the trade-off of taking the income today from the premium, is that you might have to obligate yourself to a certain thing based on what contract you picked. And so the way I approach that on my account is I usually start off with cash in my account, and then I sell an option saying that I'm willing to buy someone else's shares from them at a certain price. Again, as a seller, I receive the premium, and then I have that obligation between now and whatever contract period I picked to satisfy it. Typically, I do a week, 2 weeks, or a month out. So I'm not talking very long term. And I keep it very conservative so the odds are in my favor. But in the meantime, as an income investor, I collect those premiums up front. That's my cash to do whatever I want with it. I can either invest that in other dividend stocks. I can use it to pay the bills. I can do whatever I want with it. That's mine no matter what happens with the contract. And so that's how I generate income, is by selling. Those are called cash secured puts, is what that's called. Again, it obligates you to buy shares at a certain price by a certain date in the future. The other
It,
side,
is it probably fair to say then for your strategy, you're hoping that those don't actually end up getting exercised then?
you're correct, yeah. So there's probabilities to every single trade. And so let's say for a particular put trade, I have the cash and I'm willing to buy someone else's shares. I'm going to set it up where there's only about a 15 or 20% chance of it going against me, meaning I have to purchase those shares. The buyer, on the other hand, if I have only a 15 or 20% chance of it going against me, that means they only have a 15 or 20% chance of it benefiting them. So that's where you can see the risk is really on the buyer side. And the opposite of 15 and 20% is between 80 and 85% chance of it not going against me, meaning I don't have to buy the shares and I still keep my cash and I still keep the premium that I collected up front. So that's how you operate. Is you pick a risk level that you're ready for, 10%, 15%, 30%, even 50% chance of it being assigned to you. And then based on that is how much income you get for doing that contract.
So the higher the percentage that it could actually be exercised, meaning the higher the premium that you're paid.
Exactly. It's all related. And of course, the volatility comes into it. If you pick something very stable like Procter and Gamble, obviously
Mm-hmm.
there's not a lot of volatility there, so the premiums that a buyer is willing to pay you is going to be really small. But if you do an option on, let's just say, super microcomputers, SMCI, which goes up and down 10% a day, it seems like sometimes, obviously you're going to make a lot more money because there's a higher chance of it going really well for the buyer, so they're willing to pay you more upfront, but it could also go against them really quick too. So volatility plays a major role in it.
When you're looking to write one of these as a buyer,
Mhm.
is I would assume that even though you're looking for something where you've got a 85, 90% chance of it never actually being called, you're probably still selecting for something that if it does still happen to go against you, it would end up being something that maybe even though you're not getting it at the ideal price that you might, it's still something that you wouldn't necessarily mind owning. Is that a fair assumption?
Absolutely, and that's one of the big tenets of option selling, is that you have to be willing to want to hold that investment anyways. because you are writing a contract on real investments. One options contract is 100 shares of stock. So if you're not willing to buy 100 shares of whatever company or whatever ETF you're doing the contract for, don't do the contract, because there will be times where you will be assigned and you will have to own those shares. And if it's something that you're not willing to hold on to, it could turn out really, really bad for you. So you definitely want to understand what you're getting into and what the long-term prospects of that company are, because there might be times where you have to hold it for even a few months until it goes back up to the price you paid for it, or it can never get to that price. If you have a stock that's really volatile, it could go to zero and you're stuck with the shares. So it definitely has to be something you're willing to hold on to, at least in the middle term, at least for a couple months until the prices come back.
Sure.
There's definitely been times where I did a options trade and I am getting stuck with the shares for a few months while I waited for the market to come back and the price to come back, and then I could sell those shares or do other things with it. Yeah.
It's, definitely a ticker that's made a lot of waves over the past week or so is SCHD, the Schwab Dividend ETF. They announced they're doing a 3-for-1 stock split. I
Mhm.
don't remember offhand the date. It's October sometime, I believe, is when that's
Yeah, I
happening.
think it's on the
So
10th, end of day of
the
the
10th.
10th. Yeah.
So in essence, we're going to go from something that's worth roughly 80, we'll say $81 a share down to 27. So we can do easy math. I don't know if that's exactly where it is right now. And then I see in all these different YouTube channels that cover it, almost invariably, there's somebody in the comments section that says, this is great. I trade options.
Hmm.
So that's going to make SCHD a lot more attractive to write options on, which makes sense. You said you have to have 100 shares of whatever the thing is in order to do so. So you can go from having an $8,000+ potential commitment on an SCHD contract versus something that's just under 3,000, which is a little bit more appealing, I guess, if you're maybe more on the conservative side. And SCHD is a nice thing to own anyway, if you ask me. But as someone who, as I said, is very green to this, let's just say that, that is the case. And all of a sudden the options writing activity on something like SCHD doubles or triples. What kind of impact does that have on the price of a security to see increased options activity written on it, or does it? Does it all just kind of even out?
Yeah. So in general, it will increase it in the short term and for short term trades. So someone who's looking to invest in SCHD for the long run, it might make the stock more volatile because people are buying and selling and moving the options around. But the underlying value of the shares of the companies inside of SCHD aren't going to change based on the options.
Mm-hmm.
So yes, there might be more volatility, but in the long run, it's not going to really affect it. Um, but it is going to make the ETF more liquid, so people can buy and sell easier, especially if you don't have access to partial shares. If you have to buy it at $85, there might be some people who can't afford that, so they might buy it more now that it's $27 or $30 or whatever it happens to be. So there might be some increased pressure on the price, meaning it will go up because more people might be interested in it. But
Mm-hmm.
I'm almost certain it's going to be a short-term phenomenon. Um, and at the end of the day, SCHD is a very stable, boring ETF, if you will. I think the beta is, less than 1, which means it's very low volatility. And so most option sellers aren't going to be selling on SCHD. I mean, you're thinking about companies like Procter and Gamble and Kimberly Clark and things like that. Those companies don't move very much. They're great companies, don't get me wrong. I love SCHD, but it's not a trader's type of stock, and neither is SCHD. So yes, it will allow more people to trade options on SCHD, but it's never been a big options ETF anyways. So I know a lot of people are talking about that, and a lot of people are saying it's the best thing that's happened since sliced bread type of thing, but it won't make a difference in the long run. I think it's silly, the other YouTubers that are talking about it like that. It won't make any difference.
That does make sense. That does make sense. So, you've kind of got a varied style, I'd say, with your with dividends, dividend growth, and options. What would you say would have been some of your biggest influences as you've gained your experience with investing? Where have you gone to do your learning? Who's really made some big impacts on you as you've developed your strategy over the years?
Yeah, definitely. So there's two parts to that. I would say when I first got into investing, the person who actually played the biggest role in it is my very first manager of the first company I worked for in college. I had zero money. I was a poor college student. But one thing he said is that once you feel like you can, put $100 a month away, either for yourself or for your future children. Don't think about it. Just automate it, put it away. You'll learn to not miss it right now, but the benefit it can give you in the future is going to be incredible. And so that's exactly what I did. I started off with just a small percentage in my 401k at that employer. And, over time, it didn't feel like a lot at the beginning, but over time, it really did grow, especially, all the downturns that we've had over the last 25 years. That's the best time to invest in a 401k or some kind of automated savings because you're buying at a cheaper price. If you don't need the money for 40 years, just buy. Eventually, it's going to go up in the long run. So that advice of just putting money away really got me started and really built that foundation, that snowball, if you will. $100 here, $200 there didn't seem like much, but over time it's really compounded. So that'd be the first thing I would say is my biggest influence. Another side of that is when I was a teenager, my parents went through a lot of financial hardships and they had zero money. I mean, there was times where they asked me for money from my part-time job just to buy groceries for the family. So I knew at that point that I never wanted to be in a situation where I had to struggle for money. And so that really did influence hey, I need to find a way to let my money make money and to grow. And so that's how investing came into one of my primary focuses. When I was a teenager, I changed my career path. I was going to go into engineering and I went into finance instead because of my interest in, learning how money works. The second biggest thing in my current focus is really about the dividend growth. And I'll have to say that probably my biggest influence is PPC Ian on YouTube. His name
Oh, okay.
Ian Lopuck is
Mhm.
his real name. He's a amazing dividend growth investor out of the west coast of the United States. I think he's up in like Idaho right now, but he's been on YouTube for many, many years. And one of the very first episodes I ever watched of him is the how your dividends can compound over time. Your yield on cost, meaning you're buying it today and it's paying you $1 in dividends, but because you're reinvesting that money and the dividend is growing, your
Mhm.
yield on cost keeps going up and up and up. And that was just like a light bulb in my head. It's like growth investing is not the only way that you can invest. There are options, and income investing and dividend investing really stuck with me saying, yeah, you can grow your wealth, you can have passive income, and you don't have to ever sell your shares if you don't want to. And that was just like a total mind shift for me from the mutual funds and ETFs and the growth investing that everyone preaches on, that dividend investing is a viable solution. And he just showed that it was possible. And, even back then, this was 7, 8 years ago at this point, he was doing really well with dividend investing and has continued to grow and blossom. So I think when I watched that video, he had like maybe 2 or 3 thousand subscribers on his YouTube, and now he has over 80,000. So like I've been with him for a very long time and love everything he has taught over the years. That's really where I started really getting motivated about dividend investing and making my primary focus. So obviously there's a lot of great YouTubers out there and bloggers and things like that. So I picked up a lot from a lot of people, including yourself. Um, but he was really the one that kind of got it started for me.
The dividend snowball is definitely a real thing. I personally did a video on that a few weeks ago, just with the spreadsheet, no frills, just wanted to kind of show how somebody investing $100 a week, I rounded off to $5,000 a year to make it a little bit easier math, investing sort of in my strategy and how that annual dividend payout grows over time. And just with that small amount, you could see if you're starting like in your early 20s, by the time you get into your late 40s, early 50s, you've got so much more money being reinvested into the account via the dividends than just the $5,000 a year that you're tucking away into it, that it's just silly how much that it starts to make. And that was kind of my wake up call when I kind of figured that out just for myself, and why I wanted to launch a channel and contribute to that dialogue in any way that I could. And I remember when I put that video up, I texted a friend of mine the link to the video and I said, this is the video of mine everyone should watch, and no one's going to watch it because it's just a spreadsheet and it's so boring. And then it ended up becoming the most viewed video on my channel, like really, really quickly. So I thought, okay, this is good. There's some people that are getting hip to this this concept of money kind of rolling on top of itself over time. And probably the most frustrating thing about our style is it does take some time. It's definitely not get rich quick, but it's get rich just about guaranteed
Yeah.
if you're consistent with it. So that's what I like about it.
One of the things I always say is our mind wants to think 1 + 1 = 2. That's what
Hmm.
we're geared towards linear thinking, but with
Hmm.
compounding is exponential. So 1 + 1 does equal 2, but over time that 1 + 1 = 4, and then 8, and then 16, and it just multiplies from there. So you have to think the longer you let your investments grow and reinvest the dividends and add more money, your wealth and your income is just going to go straight up. You know that the hockey puck type of chart. You know, it's going to start off real slow. To your point, it takes time,
Hmm.
but then once that compounding really does take effect, it's going to shoot straight up, and you're like, oh my goodness, I cannot believe that I'm making $1,000 a month, $10,000 a month in passive income from your dividends because you gave it time and you focused on it.
Absolutely. So, hey, enough about my channel. If going back to yours, let's say that I gave you a challenge here. I'm going to ask you to pick two
Mm.
videos from the catalog of videos on your channel, Dividend Stockpile, and those would be the two videos that most encapsulate your style of investing. So somebody who's never been to your channel before, they're going to watch two videos to really get a good idea what you're all about. What would they be? I'm gonna link them down in the description here below.
Well, I appreciate that. Yeah, so that's an interesting one because there are so many different facets of income investing that you can really focus on. As I mentioned at the beginning, dividends, dividend growth, income ETFs, option selling. There's so many different ways. But if I could encapsulate it, it'd probably be two different videos. One is how to start a dividend growth investing portfolio from scratch. And that basically is me starting off a brand new portfolio of real money that I'm showing other people how I would pick the stocks that I would pick, how to pick the ETFs, and how to focus on the most important things going forward. The reason why that's probably one of my biggest ones is one because of the dividend growth, and two because of my goal of educating other people. So that would definitely
Hmm.
be my primary one. The second one would be related to option selling, like we mentioned at the beginning. So I have one
Right.
recently. It's cash secured puts. I think the title is Cash Secured Puts Earn Income by Dividend Stocks Cheaper is the one. And that basically walks through my philosophy and my approach to selling options in order to gain income and also to buy more dividend stocks. So I think those would be the two that I would primarily focus on. But again, I'm all about dividends, dividend growth, and then the options just adds additional income on top of it all. I'm not using any of my dividend income or any of my options income right now. It's all being reinvested, but
Hmm.
by doing options on top of dividends, it just compounds it even faster.
Are you a dripper? Do you do dividend reinvestment, or do you cash it out and reinvest it yourself?
Yeah, so I'm a mix, and a lot of people ask me that. So on
Nice.
certain accounts, I let it drip, dividend reinvestment. So as the dividends come in, it just goes right back into the same company or same ETF that it paid. And other ones I take it in cash and let it accumulate in my brokerage account. And then I pick,
Hmm.
maybe an undervalued stock or, something that I'm focused on. So the main criteria for me is the position size where I want it. So I would
Hmm.
recommend everyone have a set threshold for individual companies and individual ETFs that you're going to max out on, whether that's 5% per holding or 1% per holding, whatever it is. As you're building up that account, you might as well let the dividend reinvest and build up that particular holding. But once you hit your limit, for risk management purposes, it's probably better to use that money and invest in something that you're either underweight on or that you're trying to build up, as opposed to continue
Mm.
to add to the same holding. Because, for instance, one holding that I've had for a very long time is Broadcom, ticker AVGO. That one
Hmm.
is just skyrocketed when it comes to price appreciation. So what started off as a 3% position for me, and one of my accounts is up to 9% of my holdings right now. And that's just too much risk for me in one name. So instead of reinvesting those dividends on that one, I've used the cash from that company and invested in other companies. So that's my approach. And it's kind of a mix, but that's really how I do it. It's all about the risk management and position sizing for me.
Funny thing about Broadcom, when I launched my channel where I cover 60 dividend growth stocks, I wanted to make sure that I put my money where my mouth was. So I looked at those 60 and I said, okay, I need to make sure that I'm invested into all 60.
Hmm.
So there were certainly, a group of them that I hadn't touched. Some of them were higher yielding stocks that I personally just think I'm a little too young for right now. And then a few other things that were just overvalued in my estimation, Broadcom being the one that was the most overvalued that I didn't already own. I always wanted to own it for the past couple of years. It just keeps going up. And I thought, well, just for my own integrity, I'm going to put $100 into Broadcom. Any of the ones I didn't own, I just put 100 on them just so I could say, I do own these. I do track them. I've got a little skin in the game on all of them.
Hmm.
And that one, it continues to go up. I think I'm up like 20% on that thing
Yeah.
even now, or close to it, something like that. It's just
It's,
unbelievable. So even, whatever metrics we're all using on Broadcom there, it's just breaking the mold, I think, on all of them. It just keeps going up.
it
It's
is. It
wild.
is. It's. I mean, I got very lucky on my timing, if you will, and I
Hmm.
caught it right before it really started going up. I've held it for many years now. I don't remember what my cost base is, but I think on one account I'm up like 500% on it. The other one's like 300% up. It's been incredible. But it kind of goes. I don't also want to have my entire portfolio reliant on Broadcom continue to go up. And that's why I limit
Hmm.
my sizes. It could be the best company in the world, but if it has a bad quarter or a bad year and half your account gets wiped out, that's just too much risk. We don't have time to make up for that. So that's why I keep the limits, even if it's a great company.
So, speaking of great companies, and we don't have to limit this to individual companies, but um, being as that you are a very diversified investor, if you were going to narrow your portfolio down to no more than five
Mhm.
positions, let's just say, what are some that that you'd keep?
Yeah, that's tough, and that's actually something I think about on a regular basis. Is do I have too many positions? If I did consolidate, where would I go? But I just love investing so much that it's hard to narrow it down to just a few holdings. It also goes back to my
Hmm.
in my portfolio diversification requirements. If I'm not going to have any position over 5%, I have to have at least 20 holdings. So
Right.
five would be tough, but I would definitely focus on ETFs because I still want that diversification. So I'm going to have to include SEHD in that
Hmm.
top five. It is my number one holding right now. So there's no reason for me to change my mind on that one. But that would definitely be it. I mean, for those who don't know, it's 100 different companies inside the ETF. It's known for a solid dividend around 3 to 4%. And over the last 10 years, it's grown about 10 to 12% a year dividend growth on top of it. So it's a great fund and very low expense ratio. So that's always a solid one. The second one, I think I would do a higher income ETF. Um,
Hmm.
Personally, I think SPYI from the NEOS company is probably one of the better high income ETFs right now. They invest in the S&P 500 companies, but they also do option selling on top of it. And so their yield is about 12 to 13% a year right now, which is, of course, very high. But that's the whole point of the fund is to have that higher income.
And you interviewed the portfolio manager recently
Mhm.
for Neos, pretty recently on your channel. It was interesting to listen to his perspective of how they put that together. I ran the numbers on SPYI at the 2 year mark and saw that it was outperforming stuff like Devo and Jeppy, which were my top two as far as options related strategy
Yep.
ETFs. And I was really surprised. I didn't think that it would. And so I ended up adding that to my list as well for current income seekers. And then that interview that you had with the person at Neos, I'm forgetting his name now, of course, but um, I really liked the strategy and of the fund and the outlook of it that he had. And um, yeah, if that can keep yielding 11, 12% and keeping a nice consistent price, maybe even a little bit of appreciation,
Yep.
hard to beat that. It
Exactly.
really is. So
Exactly.
a couple of good choices
Yep.
there.
Especially if you're on the older age group or you have a
Mhm.
lower time, a smaller time frame to when you're going to need the income. It's definitely a pretty viable strategy. So his name's Troy Cates. He's a managing partner that I interviewed. It was so great for him to be able to come on and talk to us individual investors like that. But one of the things that that fund does really well is the tax efficiency. The way they structure their option selling, the way they structure their tax loss harvesting, things like that, you actually get a better tax situation than you would for instead of doing options on your own or non-qualified dividends. It's a better overall package. So I definitely like that one. I would say my third one, kind of funny that you mentioned it, would be DIVO, from the
Mhm.
Amplify. I think what they do is great. They focus on dividend-paying companies, and they do a very strategic options selling campaign on that, only on a portion of the holdings. And so you're not going to get the crazy yields that you can get in SPYI, but you're still going to get between a 5 and a 6% annual yield on that from a combination of dividends and option selling. The portfolio manager for that one, he's amazing. Definitely take a look at that fund. Um, and then the other fund related one that I add to my top 10 is actually what they call closed-end fund. It's a type of
Mhm.
mutual fund for those who aren't aware. Instead of you being able to add money to an ETF anytime you put more money in or you buy a share, what closed-end funds do is they have a set dollar amount that they take in at the beginning, and then they close it to new money. So the investment company doesn't get any additional funds from investors. And so that's why it's called closed end. And then they use those funds to make purchases on different investments. And closed end funds can be everything from stocks and bonds. It can be to option selling. It can be real estate. They can do almost anything they want with it. They can also borrow money. Um, so closed end funds are generally higher payers. And the one that I really
Mhm.
like in that space is called BDJ. It's the BlackRock Enhanced Dividend Income Fund. Again, we both love dividends, so that's what they primarily focus on. But they also do, options writing and things like that. So that would be my third one. And not to spend too much time, my individual picks would be Brookfield Asset Management, BAM,
BAM,
and
sure.
then BlackRock, BLK. Those would be my other two choices. So I know it's a wide selection, but they're all basically focused on dividends. They, a lot of them have options overlay to them. And with that setup, I'm very well diversified between all those ETFs and closed-end funds. So that's those would be my top five if I had to pick from my current portfolio.
BlackRock just buying up assets all over the place anyway. The company itself almost is starting to feel like owning an ETF. They got their hands in so many different
Yep,
jars.
they have over
Uh,
10 trillion in assets under management. So to your point, they do ETFs, they do closed-end funds, they do private investments, they do institutional investments. They really do a lot. So I like them.
well, stepping away just for a minute from stocks, we get just to really cement our status in here as a couple of nerds on the interview that we had. We shared our mutual appreciation of Final Fantasy when we were growing up as kids. Do you have a favorite Final
Oh
Fantasy?
god,
If you've got anything more current than I think 10 was the last one that I played. That was years ago.
yeah,
I'm going to be out of the loop on that. But did you have a favorite one growing up?
that's funny. Yeah, I did, and I still do. I'd say my favorite, and this is going to age me a lot, is back on the Super Nintendo. So this would
Mhm.
be back in the 90s. It was Final Fantasy 2 is what it was called. In Japan, it was considered Final Fantasy 4 because they had some over there that they didn't put in the U.S. market. But Final Fantasy 2 was my big one. They actually have it on the Apple App Store now, and so occasionally I'll play it on my phone. But that was my big one. I mean, I spent hours and hours and hours of my childhood playing that game. Um, the second Final Fantasy that I really like, and honestly, this is kind of the last one I really focused on, was Final Fantasy 7. That was back
Mhm.
on the PlayStation back in the day. Um, that one was really cool because it was the first time they had really true 3D graphics and things like that that you see nowadays, um, which was a big change from back in the Super Nintendo days. And to be honest, I haven't really played any of the ones since then. Kind of that was kind of when I was getting into college age and went off to focus on other things, so I didn't really continue on with the video gaming, but I still do play Final Fantasy 2 every once in a while. So I still have it on Super Nintendo. I have it on my phone. So yeah, that would be it. How about you?
Oh, my big one was also Super Nintendo days. I was more of a
Mm,
three man myself. Was that five or six? Six, I think, is what it
okay.
was. And I've got that on my phone. I'll poke around on that for a little bit. A friend of mine was really excited. They did a remake of Final Fantasy VII a year or two back, and with like really, totally new game, I guess. And he showed me some clips of it. It looks amazing. He says, "You've got to play this thing. All right, it's going to take you back to your high school
Yep.
age." And I was like, "I have to buy a PlayStation 5. I'd rather buy Dividend stocks."
Mhm.
I'm just at that point in my life, right?
Yep.
So think about how many shares of Hershey I could buy instead of a PlayStation
Yeah.
5. So I guess life changes after a
It
while.
does. It does, different priorities and stuff. But yeah, I mean, it's amazing what, the technology behind video games has done nowadays. Like we used to love, 8-bit and 16-bit type of graphics, and now it's like almost a movie in some of these video games. So it's absolutely incredible what they've done with it, and just the ability to enhance the story and the music that goes along with it and everything. So yeah, it's definitely great progression over time. It'd be quite interesting to see what they have playing now compared to what we used to play, back in the day. We probably wouldn't even recognize it anymore, to be honest.
Yeah, I don't think that I would based on what I saw. Well, now you're down in the Tampa area, I know.
Okay.
So are you doing any prepping for the hurricane season? Unfortunately, we're recording this before this next one blows through. Got any plans to keep you and the family safe? What's going on down there?
Yeah, so yeah, we do live in Tampa. So for those who may not be aware, there's a hurricane heading our way. Probably will hit here Wednesday or Thursday, so just a few more days. It's supposed to be one of the biggest ones in quite a while. I mean, it's Category 5 right now, which is the highest it goes. Utter devastation for wherever it hits, to be quite honest. But Tampa's been saved from hurricanes for many, many decades now. I think our last big one was like 1960. So I'm still hoping that, it curves off in the last minute and goes down to South Florida or, somewhere else. Not that I wish anything bad on them, but, Tampa generally is one of the higher, bigger population areas. So if we do get a direct hit, it's going to be quite devastating. But yeah, we still have another day or so to really know which way it's going to finally head. Personally, we live in a house that's about 20 miles away from the coast, and for Florida, we have a pretty good elevation. We're like at 50 feet above sea level, which I know is not a lot, but for Florida it is, because there's some places in Tampa that's like 2 feet over sea level. So I
Hmm.
don't expect any flooding or anything like that. But anytime you have 100+ mile an hour winds, things are going to happen. Trees are going to come down, roofs are going to come off, things like that. So we're just going to hunker down and hope for the best. I've lived here in Florida for pretty much my whole life, so I've been through dozens, if not more, of these hurricanes. And what they always say is hide from the wind and run from the water. And so we don't have to worry about water here. So we just have to get through the wind, which will basically be Wednesday night, and then we'll wake up Thursday and see what the damage is. So we'll see. We'll see. A lot of people think we're
Well,
crazy, but all my friends,
I'm
all my
I, I'm a Kansas kid, Jeremy, so I don't know anything about running from water, but hiding from the wind, we definitely know a little bit about that.
yeah.
So I hear you
The
there.
nice thing with the weather forecast is you always know if a hurricane's coming. You know a week ahead of time. So, compared to your earthquakes and your tornadoes and things like that, instead of having a few minutes notice like you might have in Kansas, we have 3 or 4 or 5 days notice saying, hey, get ready. So it's part of living in Florida. As I said, I've been through many of them before, and we'll have plenty more going forward. So hopefully we're we're good here. We still have a roof on our house when we're done, and then we'll move on. So we'll see what happens.
Well, definitely wishing you the best, and I hope that thing just blows right past Tampa and does minimal, if any, damage. I feel like we've had enough trouble with hurricanes this season already, so let's hope that there's not another one that causes a bunch of trouble, because it sounds like there's still a lot of folks in North Carolina that are going to be dealing with the aftermath of that for quite a while. So I hope Tampa doesn't join the list. So,
You might see us.
but
You might see us on the news with 20 feet of water, but it is what it is. Nothing you can do at this point.
well, hopefully not. Well, Jeremy, hey, thank you so much for taking the time to come on here today. And it's definitely exciting to get to talk to another investor and discuss different strategies. And I think at the end of the day, we're both kind of trying to achieve the same thing, and that's to have enough passive income coming in that we've got some true financial freedom, and that brings a lot of options and a lot of peace of mind. And I think that's the important thing. So hopefully everybody out there enjoys the video and shares it around. Go to Jeremy's channel. I'm going to have links to the videos he mentioned and the interview with the Neos founder, and a lot of good information down there. So definitely, investors, gobble up all of that information and put a strategy of your own together. Maybe you'll take some of mine and some of Jeremy's and come up with your own perfect way to invest. But it's all about that passive income and financial freedom around here. So thanks again, Jeremy, for coming on, and hopefully I'll talk to you again soon.
Absolutely, Colby. Thanks for having me. It was a lot of fun, and I look forward to our chats in the future.